Good morning. Good morning. We're just going to give persons a few more minutes to get into the room and then we will get started. So let's say about 10:05, we'll get started this morning. Good morning and welcome again. Sorry, had myself muted. Good morning again, everyone. I hope everyone is doing well this morning. So we are going to get started with our session right now. Just want to open up with a quick word of prayer. I ask my administrators to please just keep an eye on those persons that are coming into the room to make sure that they are able to get into the room without any issues. Father God, I thank you for your grace and mercy. I thank you for those that are here. Oh God, I thank you for those that will be joining this session. I pray, Father, in Jesus' name. I pray, Father, in Jesus' name, that you cover and keep them by the grace. Sorry about that. Through in Jesus' name, I pray. Amen. Setting myself up to be a distraction to myself this morning. Okay, so just a couple of housekeeping rules again. We remind persons that we are now basically down to our last two modules. Today, we're going to do module 6 and 7, which is going to be a combined module, and our last module will be Monday. We hope these sessions have been both helpful, educational to persons, pertaining to everything pertaining to VAT and VAT education. We will be probably repeating the same thing for real property as well as business license, going through an entire month of training. It may not be as many days, but the idea is we want to make sure it's available to persons. If they have questions, any of their questions are answered. For the three modules that we had this week, most likely we're going to send all of the quiz and the PDFs together in one email so you can have all of that documentation one time. We will give time for persons to finish the quiz. It is not mandatory that you do the quizzes, but if you're interested in getting the certificate at the end of this training, we encourage you to make sure you complete the quizzes and to make sure that you get at least 70%, which means as we go through the information, we want to make sure that it is clear for those persons going through. At the end of all of the training, we will send out also a survey because we want your input to make sure at the end of the day that the information that we're sharing is useful. If there's things that need to be corrected, that we more or less keep updating how we provide the information to you and to assist the public. The whole goal for the Department of Inland Revenue is to make sure that persons are compliant in an easy as possible manner and to make sure that the information is clear. If you have questions, we are here to assist to make sure that you can get the services that you need and you require. In addition to that, we are going to be basically completing today's session. Shouldn't be very long. I don't think it should be more than an hour and a half like yesterday's session, which means I may or may not take a break just for us to be able to go through the information and get it completed. All of the training sessions, for the most part, will either run from an hour to 2.5. As you've noticed, the longest one was the one for the VAT filing because we wanted to go in depth through that. And then the last session will be on Monday, which will be the VAT withholding session and training. So we thank everyone that has been a part of these training sessions. Again, we hope the information has been helpful and useful. And this is the department's desire as we go forward to make sure that we assist the public as much as possible in presenting the information. So to get started for this morning, okay, just want to make sure online also is getting the information. Okay, so we look good. All right, so today we'll be dealing with module 6 and module 7. They're both short modules, so these ones should not take long, but we just want to talk a little bit about record keeping and compliance and just some short special fact scenarios to go over, including talking a little bit about the refund process and what you need to do for a refund or for a credit process. Please keep in mind the Department of Inland Revenue cannot tell you which systems to use when it comes to your record keeping and different things. We can only make suggestions, and that is what this training will include, suggestions of what we think would be most helpful to you in keeping your records straight, keeping your business records in order. However, you are required, as long as you are basically registered for VAT, to be utilizing an electronic system when it comes to your invoicing aspect of things. That is a requirement. But otherwise than that, we cannot tell you how to mandatorily keep track of your invoices and things. But this session and training will just give you suggestions on some of the software or other things you can use to help you to better make sure that you're able to keep up to date with what you need, so that when you actually have to do your filing and your payments, there's no issues at all. So today, for Module 6, we'll go through identifying record keeper. That's required by us, the Department of Inland Revenue. Understand record retention requirements, organize the VAT documentation, understand offenses and penalties for not having your information properly when it comes to filing, preparing for a VAT audit, as well as to use digital tools, how to manage your VAT records. For Module 7, we'll talk a little bit about how VAT applies to the imports and exports, differentiate between the exempt and zero-rated supplies, identify which industries commonly deal with zero-rated goods or services, claim VAT refunds and credits, and apply VAT treatment in real-world scenarios. So let's talk a little bit about what records are actually required when it comes to your VAT. There we go. My mouse want to play Bo Peep. That's okay. Okay. So our objective, first of all, is to ensure that participants know what records must be maintained to support VAT filings and to defend against audits or compliance reviews. So let's talk about it a little bit. Of course, we discussed some of these yesterday, and we're going to continuously make sure the persons understand what is required when you are operating your businesses, because we want persons to be successful in their business. You're successful, we're successful. It's a partnership at the end of the day. So we are requiring persons, first of all, to keep copies of their filed VAT returns, their sales and purchase VAT invoices, their credit and debit notes, their import and export documentation, example, their C-13 forms or their bills of lading, the receipts for their capital items, bank statements and reconciliations, and their payroll records for businesses with employees related to VAT charges. So just a reminder for persons, first of all, it used to be 7 years. It is now 5 years. So we require persons to keep copies of their records for 5 years. And the copies can be digital or hard copy, but of course it must be legible, complete, and organized. I apologize. Sometimes the island tongue in me is slipped. I encourage persons, when it comes to your record and your receipt keeping, if you do not receive digital invoices from the businesses that you do business with, to utilize a scanner or a phone again to keep track of your receipts. I know a lot of the thermal receipts and sometimes physical receipts fade, regardless of how you keep them. They can be damaged. Anything can happen, storms, anything. So we encourage persons to keep digital copies. And even in the process of keeping digital copies, keep a cloud-based system, whereas if anything happens, you can still access those digital copies. Don't just keep them on a computer that's in a place that can also be damaged. Think about utilizing cloud storage for your stuff. And a lot of things nowadays, you can get security with cloud storage that is safe and easy to maintain, so that you don't lose your records in an attempt that we have hurricanes on a regular basis. Buildings can get damaged, systems can get damaged. So you want to make sure you're keeping your records in a manner that is easy for you to access, regardless of what may happen. So some of the tools we recommend, of course, would be using Excel to keep track of your records, Google Sheets, if you want to keep manual logs. Accounting software can include anything from QuickBooks, Wave, Zoho Books, cloud storage, you have everything from Dropbox, Google Drive, OneDrive, as well as Amazon and a number of other companies also offer online cloud-based storage with security and different things to make sure that your files are also stored and their proprietary files are actually protected. So let's look at what you need for audit readiness. So to help participants understand how to prepare for a VAT audit and what triggers DIR investigations. So common audit triggers, first of all, late filings and repeated late payments. And I said this yesterday, we encourage you when it comes to your payments to make sure that you are doing them in a timely manner. If you know the date for you is the 21st, for everyone that does either on a regularly quarterly or on a monthly basis, or the 14th for those that are part of the large taxpayer unit, do not wait the day of to do your filings and your payment. Because if your payment is not going through our portal and you have to either do a bank transfer or you have to go through the process at the end of the day of doing it over the counter at the bank, you still require to have at least 2-3 days. So you want to make sure you give yourself space for that. If we see in our system that you are constantly and repeatedly filing late, or you're constantly at the end of the day paying late, that will encourage us to say that we need to do an audit to see what's going on as to why your filing cannot be done in a timely manner. In addition, that sudden changes in VAT patterns, example, refund claims, large drop in output VAT, these are things that we also pay attention to, but this is why we also say to businesses, keep in communication with us, use the portal to communicate with us. We know anything can happen over the course of business. You can have a good year, you can have a bad year, you can have multiple bad years and good years. So if changes occur, we just ask that you communicate with us and stay in contact so that at the end of the day, if you need assistance, the Department of Inland Revenue is here to help to make sure that you stay compliant without any issues that may come or that may arise. Complaints or inconsistencies with your business license filings as well may also trigger from us common audit triggers. And we are encouraging businesses, if you are a VAT registrant as well as you are actually licensed to do business, keep both your business license and the up-to-date business license where persons can see it. If the business license is like how we are now 2024 and we are already past March 31st, your business license displayed should be the March 2020, should be the 2025 business license, not the 2024 at this point. And for your VAT, you need to have your VAT certificate displayed at all times where someone can easily see them. Otherwise, you put yourself in a place where you're non-compliant, and also you open yourself up to having penalties and fines applied to you. So just suggestions on how to prepare. First of all, we encourage you to create a monthly VAT folder labeled by period. And this can include your return copy, your payment receipt, your invoices for your sales and purchases, any adjustment dockets, whether it's your credit or debit notes, and to prepare an audit file or binder. And that can look something like to keep a VAT compliance binder or a drive on the folder, whereas your section 1 is your file returns and payment receipts. Your section 2 is your sales invoices. Your section 3 may be your purchase invoices. Your section 4, your adjustments for your credit and debits notes. And your section 5 may be communications with the Department of Inland Revenue. And this can be in the form of anything from emails, messages sent on the portals, or even at the end of the day, screenshots for when you've done your filings and different things to make sure that you have these things as a record to ensure it's easy for you to stay compliant. And we encourage you to do a self-check at least once per quarter to ensure that your records match your file return. So if there's any differentiation, you can communicate with us to make sure at the end of the day, you have all of the information and assistance that you need. Before I move on to offenses and penalties, any questions so far? I want to make sure that I'm not going too fast for persons as we go through the presentation, but I also want to make sure at the same time the persons are getting the information. Okay, no questions online either. All right, so let's move on to offenses and penalties. And so just as a reminder, we want persons to understand the whole goal between these educational series is to make sure that persons can be compliant voluntarily. without us having to basically have either our compliance investigation units come on to persons. We want to assist you into making it as easy as possible. I know sometimes persons, whether they are new to business, have been in business for a while, the changes, whether it's with the site, whether it's with the systems, we want to make sure we keep you up to date and make these things as easy as possible. So to educate participants on compliance obligations and financial legal risks of non-compliance. We've discussed some of these before, but we just want to go through it again with you. So let's look at some administrative offenses. First of all, failure to issue a VAT invoice. That can be up to $2,500 per incident, depending on the frequency or where you're at when it comes to your compliance. Non-display of a VAT certificate can be up to $50,000 fine. Failure to file a return could be up to $500 fine. Failing inaccurate information could be penalty plus possible audit trigger. And please keep in mind that these fines may actually change as amendments are actually made to the bill and to the law. So, criminal offenses, of course, issuing a VAT invoice when you're not registered can be up to $250,000 fine or 12 months imprisonment. I've said this before during the course of the training, and I encourage persons again. 3 things to keep in mind. 1, any institution that you go into that is charging VAT should have their VAT certificate displayed. If they do not, like I said, if you want to be polite, you can ask them for it. But if you do not feel like being polite, you can also communicate that to us. I have one of our polite compliance persons come out and find out why it's not displayed. Secondly, if it's not displayed, where you can easily see it, you are not required to pay VAT. Because one of the legal requirements for them to be actually charging VAT is the certificate has to be displayed so persons know that they are a registered business. In addition to this, you can also go online at inlandrevenue.finance.gov.bs, and underneath our VAT tab, you will see that we also have a list of registered VAT registrants and businesses, as well as those that may be TIN only, that enable you to keep track of the businesses that you are, as a customer, utilizing their services for. And this is constantly being updated because we want to make sure that the customers are being treated fairly and the businesses are being treated fairly. Then, of course, you have voluntary disclosure. So if a business finds out at the end of the day that they may have had errors with their audit, like I've said throughout the training, communicate this to us. This may result in reduced penalties because you may still incur a penalty if you miss a date for your filing or your payment is less than it actually should have been. You may still incur a penalty, but at least if you communicate to us, then it's a possibility that the fine may be reduced, as well as we require written explanation and supporting documents. This is why I've encouraged persons throughout the training to make sure that you keep track and records of all of your communications, but also to use our portal as an additional means. If you email, if you call, and if you use the portal, just to make sure that you cover yourself at the end of the day. So let's look a little bit at using electronic record keeping. So as I've mentioned before, we cannot say to you specifically which tools to use. We can make suggestions about which ones we think could possibly be some of the best ones. You may find something else that works for you. As long as you are registered for VAT, you are, however, required to use an electronically based invoicing system to keep track of those records. But how then you keep track of the other aspect of things is really up to you at the end of the day. So one of the first things you can look at is Excel and Google Sheets, and this can be for tracking VAT manually from your sales and your purchases. So when it is time for you to actually put in for your VAT filing, you have that already documented. We showed an example of the output worksheet and the input worksheets, which look exactly like spreadsheets. So if you decide that you want to utilize those, that is an option for you to use to make sure that you're keeping track of those things so that they match up to the records that you provide to us. Then you have QuickBooks, Zoho Books, Peachtree, and a number of actually electronically automated systems that already do the invoicing and the automated VAT calculations, and they're able to easily export for you already that VAT already organized for you in a system that makes it easier for you at the end of the day to be able to keep your records in order, to keep track of your sales, to keep track of your purchases at the end of the day. And then you have Wave Accounting, which is a free option for small businesses. As far as it comes to storing your files and documents, you have Dropbox, you have Google Drive, You have OneDrive, and there are a number of other softwares and systems that you can utilize. But these are all suggestions to make sure that you're able to keep track of the information in the records that you're using. We encourage persons to consistently file and name all of their files in an order that's easy for you to follow, whether, for example, it's 10, the quarter, the year, and when the return is, so that if you have to refer back to something, whether it's for audit purposes or you have to refer back to something for a refund or credit basis or whatever may come up, it's easier for you to find your own filing system and to organize. So why use digital tools? First of all, they're faster to access to documents during audits or inspections. It's a reduced risk of physical damage or loss. Example, fire, water. Like we say, we have hurricanes on a regular basis. So even if you decide that you still want to keep some of your physical records, we encourage you to keep also digital records and to use digital systems. And to also not just have one, but to have at least two, maybe three backups. And the reason for, I would say, this redundancy is simply the fact that even with electronic systems, hard drives, things can get damaged. So you want to make sure that it is always easy for you to access your files and have them easily accessible to you. It's easy to search, sort, organize, and retrieve documents by the date, the type, and even the tin. Say you have multiple businesses and you need to keep track of all of your different businesses' activities, their VAT filing, and different things. Excuse me. I can only imagine the nightmare it is having to go through physical records for, say, you have a franchise that has 10 different outlets and you have to keep track of that for all of these different businesses. Or even as we discussed earlier, you want to do group filing, but you still need to have the information from the different businesses, even to submit for the one VAT filing. You want to have that in an easy to retrieve system where you can find the information quickly. And also, if you're a small business looking to grow, it helps the small business scale with the automated VAT tracking. When you come to banks and other places and they want to look at your records, it's easy to show them the records based on the fact that you've been utilizing an electronic system to keep track of what you've been doing. So QuickBooks, Zoho Books, and I am not a let me just throw this out there. I'm not a distributor for either one of these. These are just suggestions. Of course, they automatically generate VAT compliance invoices, track input, output VAT, and prepares reports. They allow for easy export of summaries for DIR review. They offer mobile app for receipts and for scanning. And in addition to that, a lot of these softwares are not really difficult to use. You may still require the assistance of an accountant or bookkeeper just to help you get the initial setup. But once everything has already been set up for you, it's usually very straightforward. And just a reminder, when you get over a certain amount, say, for example, those persons that are over 5 million, you require basically to have a BICA certified accountant to come in and do an audit when you have to renew for your business license and possibly when you need to file for your VAT. So you want to have a system that makes it easier to keep track of what's being done and also to be able to control, if you have more than one business, who has access to what at what level. Then you have the Google Drive, the Dropbox, and the OneDrive that enables you to keep your systems organized when it comes to your filing, your receipt copies, and how you keep your information. I would encourage persons, once you start, then just following up and make sure that you're maintaining it makes it a whole lot easier for your business. Even if you're a small business looking to grow, developing the habit now makes it easier when you're looking to get basically financing to grow your business, investors, because then it puts you in a position where you can see that this business is already organized. They know how to track. Investors know when they need their dividends and different things. They're already systemized. If you're not already in a system like this, we encourage you, even if you're not registered for VAT, to start doing it because it's just good business practice that enables you and assists. Then, of course, you have Excel and Google Sheets for keeping track of the VAT logging, whether it's the invoices, the customer suppliers, VAT charge payments. And Excel and Google Sheets offer you a number of both manual and automated tools that can also assist with these things when it comes to tracking and different things. So although they're simple tools, they're tools that have a lot of advantages that can assist you with learning how to keep track of your business as well. And then, of course, with things like QuickBooks, Adobe, and others. You also have the ability for mobile scanning apps. There's an app called Invoice ASAP that I don't have registered on it, which enables you to do invoices as well as to receive signatures from your clients at the end of the day. So you have a lot of technology that is still available to assist you. Now, I know sometimes a lot of persons have gotten so used to just doing things sometimes in an analog basis, but my recommendation as you're moving forward is to consider at the end of the day, how do I integrate utilizing still my analog practices with a digital practice to make sure that I am covered on both ends and to make sure at the same time, I'm making sure that the work that I'm doing becomes as seamless as possible. And then, of course, you want to make sure whether you're using a cloud-based system or hard drive or whatever it is, you use passwords to protect your folders and restrict access to folders to persons that don't need to have it. Perform monthly backups on an external drive or cloud. For example, if you have a business that basically you're storing all of your cloud-based information on in the cloud. Say you're using OneDrive, you're using Dropbox. What I would suggest then is to take all of that information, buy a big external drive, export it to that, and keep that offsite and secure it somewhere. And do that on a monthly basis, a weekly, whatever your business requires. So worst comes to worst. If anything happens to even the cloud-based or the other electronic systems, you still have all of your information already backed up and your business can continue very easily. So this is just a recommendation of a folder structure that you can look at, whereas you have the year, the quarter, and then for each of the files, you have whether it's a return, each of the folders, a return, the payment receipts, your sales invoices, your purchase invoices. If it's quarter two, you have your audio related dockets and your summary ledger. So that at the end of the day, when it comes time for you to actually do your filing, it's very easy for you because you already have your stuff organized in such a way that it's easy to keep track of. So like I said, for today, today's session may not be as long a session, taking consideration that both of these modules are short. So instead of stopping here, I'm just going to continue straight through the section for section 7. So let's talk about VAT on imports and exports. So to understand how VAT applies when goods or services cross borders and how to handle reporting obligations properly, that's our objective. So for imports, of course, VAT is charged at the border with customs on the CIV value plus duty. And importers must provide TIN on custom declarations, which is a C13 form, a supplier invoice, a bill of lading, and of course, possibly an airway bill. This is for the importers. Now, for us persons who deal in business, we know now that when you're bringing stuff in, you have to provide an invoice from the company. Say, for example, Amazon, you have to provide whatever invoice you're using for that or some other supplier so that for customs, they can see exactly what it is, the items, how they're listed in the costing, so that at the end of the day, when you actually have to go to do your input VAT and you have to claim VAT on the purchases that you're doing for your business at the end of the day, you have all of the information that you require. This is why when you're utilizing an importer, you want to make sure that the importer is a VAT registered importer. So at the end of the day, you're able to then claim your import VAT from those things that you are bringing in. If you're bringing in things directly, at the end of the day, from a supplier that may not, at the end of the day, be a VAT registered supplier, then you may put yourself in a position whereas you're not able to claim your input VAT. So you want to make sure that the business that you're dealing with is a business that is registered and is able to issue to you TIN on your customs declarations, or I'm sorry, issue your custom declarations that has a TIN on it as a supplier and an invoice. And most likely as you're going through customs, because each of the government agencies have to be registered with a TIN, you're then able to still use your invoicing form from customs and your declarations as a part of your input and as a part of your preparations for when you have to do your input VAT. So let's look at your exports. Most exports of goods and qualifying services are zero rated, meaning if you are doing a service in the Bahamas or you're shipping goods out, then those would be zero rated. When you do your VAT filing, you would take that information and you would put that information on the zero rated line, which is line 1, if I remember correctly. VAT is charged at 0%. So even though there's no VAT charge on those services, the rate for VAT on those services is 0. So it still has to be included as a part of your overall turnover and your gross turnover. It's just that when you are filing, you're taking those particular items and putting them on a zero rated basis. However, the business can still claim input VAT on the related expenses to the actual exporting of the goods. If you have to use a shipper to send your goods out, then although the VAT would be zero rated for what you're actually sending out, you're still able to claim your input VAT because you would actually have had to export it and pay for the expense of it being exported if it was not covered by your customer. So conditions for zero rated exports: evidence of shipment or delivery outside of the Bahamas, an invoice indicating the destination. Say, of course, I'm somebody that's doing a marketing service, graphics design, and basically I have a customer outside of the Bahamas. That means when I invoice them, it needs to show correctly their address, the name of the business, the location of the business, so that it can be seen that this business was done basically outside of the Bahamas, and exports within 90, a required timeline, typically about 90 days. Any questions so far about this? Okay. So look at VAT exemptions versus zero rated. Okay. So our objective is to differentiate between exempt and zero rated supplies and understand the impact on our VAT returns and our input claims. So let's look at our exempt supplies. So exempt supplies, no VAT is charged and input VAT cannot be claimed. Examples of this would be residential rent, educational services, financial services, bank fees, interest. So input VAT cannot be claimed. If you're going to school, tuition cannot be claimed. Even if the business is making over the threshold, say for example, they're making over 100,000, they cannot still at the end of the day claim VAT or register for VAT for that particular business because tuition is one of those things that are an exempt supply. Zero rated. VAT is charged at 0%. Input VAT can be claimed. And examples, of course, would be export selected grocery items. We know at one point in time, bread basket items was zero rated. So let's just look at it from that perspective, although that's changed. Medications, infant formulas, and different things that were zero rated items. So exempt, output VAT charge, no. Zero rated, the rate would be actually 0%. Input VAT recoverable for exempt items? Absolutely not. For zero rated items? Yes. And the listing, I would say, for what is exempt, what is zero rated, all of that you can find actually inside the bill. We honestly do not have the time to go through the listing. That's even like right now, the items that are actually 5%. There are about 72 pages of items that are actually listed. So as you can imagine, that's something we would encourage you on your time if you have an inquiry, and we keep those things listed on our website to make it available for persons to actually look through. Does it appear under return? Yes, an exempt item would appear under exempt sales, and zero rated, same thing, they would appear under zero rated sales. So key distinction, key rated items are taxed at 0%. But businesses, of course, can still claim input VAT on related expenses. Exempt items are not taxed, and businesses cannot claim input VAT related to those sales. So zero rated equals 0% VAT. Even though it is zero, the rate is zero, but they're still in the VAT system. Exempt, VAT doesn't apply at all. And so why does this matter for businesses? Businesses dealing primarily in zero-rated supplies may qualify for VAT refunds. Businesses dealing in exempt supplies may absorb all input VAT costs, which affects profitability. And like I said, we have bread basket items because at one point this was the case until the rate change, but it's just using it as an example for the zero-rated items. Of course, with zero-rated items, the services can be exports, international transport, and other things. Sectors such as an exporter, they can claim a VAT refund if possible, depending if their input, I'm sorry, outweighs their output. But with examples, first of all, nothing can be applied. And of course, no input could be claimed either. So what we also want to keep in mind is partial example exemption situations, whereas you may have a mixed business. We've talked about this a little bit before, where some businesses have both taxable and exempt sales. You have schools that may have a gift shop or a cafe, although they cannot charge for the tuition. If the sales and the cafes are basically the the amounts that they make outweigh basically the 100,000 and those are registered for VAT. They can claim their input for those items and for those particular sales, but they would not be able to include the tuition in that cost because, of course, they would have to put what their gross turnover is, and they would have to show what the turnover is that includes the exempt sales, which would be the tuition, and then the turnover that would include anything that has any charges, whether it's at the standard rate or even if it's at the zero rate. And they must apportion their input VAT between the taxable and exempt activities and use proper taxing codes in their accounting system to make sure that they're keeping track. Like right now, what we should be seeing in your food store items is when you are going into the food store, different places that are charging both the 5% and 10%, to look at the receipts to make sure that they are properly showing the difference between the 5% and 10%. If you are a VAT registered business doing business with another VAT registered business that is operating, you will definitely want to make sure you can see the difference between the 10% and the 5% so that the VAT that is shown, so when you have to do your VAT filing, you're able to put those on the correct lines for the VAT filing. And a common mistake for persons to avoid is treating exempt sales like zero-rated items and attempting to claim input VAT. This leads to adjustments, penalties, and of course, rejected refund claims. And if it's found that it is intentional, it could also lead to fines that go along with the penalties. All right, so let's talk about VAT refunds and credits. Is everything so far clear? I want to make sure I am not going too fast, and this is why I keep stopping to check. Any questions so far at this point? Okay. I hope this means that everybody's just absorbing the information real quickly. So, VAT refunds. Who can apply for a VAT refund? First of all, you have to be a VAT registered business. If you are a business that is doing business with another VAT registrar, but you yourself are not VAT registered, you cannot claim a refund. It's as simple as that. If you are a business that is doing business with another VAT registrant, but you're not registered for VAT, you cannot claim a refund. It's that simple. Input VAT exceeds output VAT for the period. A VAT overpayment was made. You are a monthly filer with zero-rated supplies that are greater than 50% of your total sales, no carry forward required, or a credit balance after carrying forward VAT to the next period. You are a quarterly filer with a minimum refund claim of $500. So who can apply for a VAT refund? Secondly, non-taxable persons. Example, if you are overcharged at customs, you are an approved charity, diplomatic mission, or Freeport licensee. You, of course, would submit your forms 14A and 15 via our OTS system, and no carry forward is needed. The refund may be claimed in the same period. So how to apply for a VAT refund for VAT registrants. Step one, you would file all the outstanding VAT returns. Ensure your filing, of course, is up to date, and the refunds will not be processed if the returns are missing. That means if you're trying to apply for a refund, but you're already in a period where your filing is actually due, you will not be able to get that refund until your filing has been brought up to date. Step two, request a refund via OTAS system. You have to request a refund in writing. So you must submit a refund request online at inlandrevenue.finance.gov.bs. And you may apply for multiple periods in a single refund request, but it has to be done in writing and it has to be done through our system. Step three, upload any supporting documents. This includes your input, your output VAT worksheets, and your VAT invoices and receipts. Any custom documents for any imports, export documented for zero-rated exports, and you have 5 business days to respond if the requests any additional documentation to make sure that you're able to put in for your VAT refund. So after you've put in for the refund, of course, you will have a refund reviewed, which will be done by our general processing unit. Your VAT return and documents will be reviewed. A sample of your documents, 10 to 12% may be checked, and errors may be corrected by DRR, or you may be asked to amend your return. In addition to this, of course, the second would be a compliance check. Your tax compliance status will also be verified. Any unpaid taxes, example for your VAT, your business license, real property, stamp tax, stamp duty may be deducted from your refund. So we encourage persons to please make sure you keep up to date with all of the different areas and aspects to make sure that none of the refunds or things that you may be, I would say, eligible for is deducted due to some other charge and fee. So let's look at a timeline for the refund. DIR, no audit within 30 days of the request. If the audit is required, then the decisions may be made within 10 days of the audit completion. A refund is dispersed after approval, of course, within 60 days. And a refund paid late, interest applies, registered persons only. So special notes for non-taxable persons. We encourage you to submit the refund request again via OTS, where forms 14A and 15 are what you would utilize. 1 refund request per calendar month, and no statutory processing time, but the IR aims to decide within 30 days. We want to make sure we get back to you as quickly as possible as we can. And of course, let's look at a refund versus a credit. The situation, you're eligible but don't meet the refund threshold. That would be for persons that say they file on a quarterly basis, but it's $499. You don't meet the threshold. Overpaid VAT with complete support, or you have outstanding taxes. The result for the first one is the credit is carried forward to the next period. The second one, overpaid VAT refund is processed. You have outstanding process. The VAT is used to offset the liabilities before you have anything that possibly is paid out if you're actually eligible for it. Now, before I move on to the industry scenarios, are there any questions about this particular section? Okay. Okay, the question is, which type of exempt sales are included on the return, and why are these included if there's no VAT and no input VAT claimed? The listing of what all exempt items would be, again, I would say that would be something that I would encourage you to look at the listing for the bill and the act. I honestly would not be able to give you all of those exempt items now. But the reason that those items would be included is because your VAT is basically based on your complete turnover. It is not based on the portion that is only charged VAT or the portion that is only zero rated. It is based on your total turnover. So whatever total sales that you make at the end of the day, that is when you're making your report to the department of this is what my total sales were. This is what was vatable based on a standard rate. This is what was vatable based on maybe the 5% rate. This was what was zero rated, and this is what is exempted. So when you do that, then we're able to look and determine based on the documentation that you submit to make sure that the amount of VAT that you are required to pay is calculated properly for both the department's sake and also for your sake. Because just like we mentioned going through this, we wouldn't want you to be overcharged for VAT, and we definitely don't want to be undercharged for our sake. So you include those because your total sales does not differentiate the difference. It's only the fact that when you're filing for VAT, you would determine whether it's a zero rated item, an exempt item, a 5% now item, depending on how we do who you do your purchasing or your sales to, as well as the standard 10% rate. I hope that answers the question. Any other questions? I'm just going to exit just one sec. Check chat. Okay. All right. So if we don't have any other questions, let's just look at some industry scenarios. Like I said, with this training today, this may not be a long training because these are both short sections, but these were important things that we needed to go through for persons as well. And this, along with the other handouts, would also be made available. So let's look at our first scenario. We have a farmer that's basically dealing in zero rated items. He sells produce locally. His sales may be zero rated, but he can still claim input VAT on his tools, his fertilizer, and his supplies. And he must maintain records proving his agricultural business. So say he sells items that at the end of the day, he exports out of the countries, pineapples, potatoes, bananas, but he exports those items out of the country. Because he's exporting those, first of all, he can't charge VAT on them. And secondly, the VAT that he actually does charge on them would be zero rated. So when he actually has to do his input, his output and his input inside of the system, all of this sales and his turnover would also include the items that he exported. So all of that would be a part of his full turnover. However, he would take the portion that was zero rated and put that on the line for zero rated items. Then he would be able to also put in for his input for his expenses and claim in that instance his input VAT once it's outweighing actually what his output VAT actually is. Let's look at our second scenario. An exporter. He ships goods outside the Bahamas. He charges 0% VAT on his invoice. He retains his export documents, his C-13, airway bill, his contract. He would be able to claim input VAT on the packaging, the transport, and the labor because those are expenses he incurred, although the service was outside of the Bahamas and that he sent those items out. Although he can't charge VAT, he still would be able to charge 0% VAT, which means the sales aspect of what was done would be put in the zero rated, but then he would be able to also claim his input VAT for all of the expenses that he occurred due to him having to ship or export those items out. Any questions about this part before I move on to the next scenarios? Okay, so let's look at another two. So let's look at the school. Of course, we know the school is exempt, tuition is exempt. The school provides education, and because of this, it doesn't matter what they charge, it's exempt, and they can't charge VAT on it. They cannot claim input VAT on the desks, the utilities, the repairs. So regardless of what expense the school incurs, because the service and the supply that they provide is an exempt service, they then would not be able at the end of the day to register or apply for VAT in this instance. However, say the example that the school, like we said before, has a tuck shop and something else that actually causes them to actually be over the threshold. Then in that instance, the school would be able to register for VAT, but they would not be able to claim anything pertaining to the tuition or anything pertaining to any expenses that are directly related to the school. However, things that are related to the gift shop, they would be able to, of course, put in for that, and they would be able to claim input VAT for that because they would have to have a license for that particular business, even though it is a part of the overall school's tin. Remember what I said? You are being charged VAT on the tin, not the license. So the school would also have to have their license for operating as an institution of education and a license for operating that CAF, but both of those would be under the same TIN. So if the CAF is making over 100,000, the school would then have to register for VAT. When they put in for their gross, they would have to put the entire gross that the school makes as an institution, and they would have to take that portion of the tuition that is exempt and put that on the exempt line, because that would not be counted towards their output and their input. However, it still needs to be recorded because they're recording their total turnover. In addition to that, when they then put in for the store or the bookstore, that information would go on the standard rated line for those services. Is that clear? Okay. And then our next scenario would be a pharmacy that has mixed supplies, where they're VAT exempt, prescribed prescriptions on an approved list, VAT standard rated items, say cosmetics, personal care. And so they have to make sure that they're tracking things that are standard rated, things that may be exempt, things that may be zero rated. And now, in addition to that, like I said, in certain places, if you're also selling those foods and those items that are a part of the 5%, right, which are basically non-prepared foods to be consumed, then you also have to also account for those things in your record keeping as well. I hope I'm not going too quickly. I just wanted to make sure this sets in. So that is basically our presentation for today. Just a couple of reminders. First of all, we encourage persons, I'm sorry, let's go back, to make sure if you have any questions and inquiries, you can go to our website, Department of Inland Revenue.finance.gov.bs, go to the value added tax tab. And as you notice, we have a listing of information for the guides, industry standard, the acts, the amendments, and we are regularly updating our website to make sure the information is available to you. In addition to that, we encourage persons to make sure you have the correct payment information. If you decide to either do a direct bank transfer or you decide to go over the counter, please keep in mind that the government of the Bahamas has more than 60-something bank accounts. The Department of Inland Revenue has more than 10. So there are times that persons go when they make a payment and it goes to the incorrect account, and then their information doesn't get to us. And they're saying they made their payments, but it may have gone to the wrong account. So we encourage you, depending on what you're doing, to make sure you have the correct banking information so that your payment hits the correct bank. And at the same time, the reality of it is, as long as you are dealing with people, even the banks make mistakes. So you want to make sure that the information that you put in and you receive from the bank is correct, so that if an error occurs, it can be quickly corrected for you and that you don't incur any fines or penalties due to somebody else's mistake. And of course, we encourage you to utilize the portal to communicate with us. Check your inboxes for messages for your filings or anything else, but also to communicate and send to us any changes, any requests, and any queries that you may have or that you may make. So our key takeaways for today, of course, for our upcoming module. So for our upcoming module, we'll be talking about VAT withholding and public sector transactions, what VAT withholding is and how it works, who must withhold VAT and under what conditions, the filing and reporting requirements for withholding agents, and how suppliers record withheld VAT on their returns. For examples, government contracts and public institutions. Just a quick reminder again, like we said, the links for all of the trainings will be shared for the PDFs and everything else in basically one email for the last 3 trainings, as well as the quiz links. So we thank you again for your time. We thank you again for your participation. And if you have any questions, please feel free to contact us at tax inquiries at bahamas.gov.bs or email us at dir_comms at bahamas.gov.bs. Thank you again for your time. And I just want to close out the same way we opened. Father, I thank you for your grace and mercy. I thank you for those that have joined this session and these trainings. We pray that the information has been helpful and useful, oh God. I pray, God, now as they depart, that you cover them and protect them by your grace. In Jesus' name we pray. Amen. Have a blessed and a safe weekend, please. And thank you again for joining us for this training.